Hello and welcome to the Sand to Pearls Market Commentary. Market week ending Friday, September 20th, 2013. Market breadth. With this past week's market advance, our bull-bear point and figure ratio rose from 1.40 to 1.89, advancing further back into bullish territory. The total count of securities in bullish or bearish patterns increased 8% to 2,116. The count of bearish stocks decreased 10%, while the count of stocks in bullish patterns increased 21%. The Sand to Pearls P&F Market Breadth Summary Chart shows us a market now 3 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking membership, and clicking the sign up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 157 points for the 7th rise in 17 weeks. At a positive 339.15 points, it has broken above the November 2011 top, but continues below the November 2010 top, the January 2011 top, the February 2012 top, the September 2012 top, the March 2013 top, the May 2013 top, the July 2013 top, and above the March 2011 bottom, the June 2011 bottom, the August 2011 bottom, the December 2011 bottom, the May 2012 bottom, and November 2012 bottom. Market Gauge Volume Analysis. In this week's volume analysis, the Russell 2000 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 5 accumulation days and 1 distribution day. Of the other indexes, both the S&P 500 Deposit Receipts and the Diamonds Trust ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended in distribution mode. Momentum. The CCI 20 continues its second week in a Woody's uptrend and remains outside the plus or minus 50 range for a valid zero-line reject. In Woody's trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 32 weeks ago, while the daily CCI 20 began a Woody's uptrend 1 week ago. The CCI 20 weekly continues above plus 100. We await a return to the plus or minus 50 range for a valid zero-line reject entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 industries are negative. Bullish, S&P Retail has entered the top 5. Gold and silver continues to lead the bottom 5. Comp Tech has left the bottom 5. Bearish, semis, networkers, disk drives, and brokers have left the top 5. Disk drives and computer hardware have entered the bottom 5. Focus this week, Monetary Inflation Prospects by Alice Dar McLeod at goldmoney.com, 20th of September, 2013. Some points from the article. If you expand the quantity of money, prices eventually rise. Or more accurately, the purchasing power of debased money falls. The problem is how to measure currency debasement, and this has been a topic of heated debate since fiat currencies first developed. This has led me to propose a new measure of money, which at James Turk's suggestion I am calling the fiat money quantity, or FMQ. The purpose is to give us a measure of fiat money that enables us to assess the danger of currency hyperinflation. I shall be publishing a paper on this shortly explaining the methodology. The dotted line in the chart is the long-term exponential trend rate, and it is immediately obvious that the FMQ is now hyperinflating. It currently requires a $3.6 trillion contraction of deposits to return this measure of currency quantity back to trend. And here is the chart that he is referencing. Continuing, this accurately sums up the problem facing the Fed. We must understand they are in an almost impossible position that dates back to their monetary response to the banking crisis. Once the addiction to weak money hits this pace, there is no solution without threatening to bring down the whole system. We leave you with that happy thought. We don't have to continue in the Dark Ages. We can have a new Renaissance. Thank you for joining us for this week's Sand to Pearls market commentary. We hope that you're having a pleasant weekend, that you have a great week coming up, and happy trading.